Previously, we've produced videos that tackle the way the new IR35 legislation could affect you as an individual working through a personal service company, and also how it may affect an employer who uses contractors of this nature. The links to these videos are in the description below if you wish to take a look. However, we have had discussions and comments from sole traders who still feel in the dark about whether they will be affected by the updated IR35 legislation. Therefore, we wanted to do something about that, and so this video seeks to tackle these concerns and hopefully provide some much needed clarity for sole traders. Before we dive in, we truly hope you're enjoying our weekly videos. If you found that they have been of some benefit to you in your educational or professional career, would like to see more, please hit the subscribe button and notification icon to receive alerts of our new video every Wednesday. Generally, the definition of a sole trader will be classed as someone who both owns and runs their business and has no legal, separate identity from the person themselves. It's commonly said that as a sole trader, you are the business, and the business would simply not exist without you. So as a sole trader, you wish to understand if the new IR35 legislation will relate to you in the same way it does to incorporated personal service companies, sometimes termed contractors. Simply put, the answer would be no. As a sole trader, you are not affected by the IR35 legislation, because it only applies to incorporated companies when an intermediary between the client and the individual exists. However, there is a big but. The rules around principles of employment status, which is extremely closely tied to IR35, and underpinned by the employment law, affecting everyone, including sole traders. Effectively, this means that the sole trader in question would still need to pass the relevant principles of employment test, and if they're deemed an employee, the usual tax implications are still required to be met. These obligations, however, will be dealt under the employment law, rather than the IR35 legislation. The principal tests of employment are control. What degree of control does a client have over what, how, when, and where the worker completes the work? Substitution. Is the personal and direct service by the worker required, or could a different worker with the same skills substitute their place? Mutuality of obligation. This is a concept where the employer is obliged to offer work and the worker is obliged to accept it. Generally, sole traders are able to demonstrate enough control over their own work to be considered self-employed rather than a direct employee of the client. As such, any income generated by their business will be considered personal income, and therefore you are legally obliged to complete a self-assessment tax return each year. Taxes that sole traders must pay are income tax, Class 2 and Class 4 national insurance contributions, and regular VAT payments if you're registered for VAT. If you're considered a full-time employee of the client you are working for, then the above should be paid through the company's usual PAYE. Thus, to conclude, sole traders' income and tax implications are not governed by IR35, but will be governed by employment law, and the obligation to carry out self-assessment tax returns every year will ensure legalities are met. So just to clarify, sole traders should not be worried about IR35 legislation, as it will not affect them. What sole traders should have knowledge of, however, is the relevant employment legislation that applies to them, and ensure accurate reporting of their self-assessment taxes each year. Disclaimer, we are not providing legal advice in this area. Please seek professional legal advice for more information. Metroun, a commercial hub to your business.